Thank you for listening to the Real Estate Voice podcast. I'm Vernon R.E. Jones, managing broker, owner of Jones Homes, and for over 30 years, we have serviced the 7-county Denver metro area. The number of Americans filing new applications for unemployment benefits fell last week, surprising economists and boosting hopes that the Federal Reserve will finally start cutting interest rates next month. All this year I've been saying that they're probably going to cut rates once in September. Speculation now is that they may cut twice before the end of the year. The Labor Department said initial claims for state unemployment benefits dropped to a seasonally adjusted 227,000 for the week ending August 10th, missing economists' predictions of 235,000, according to a Reuters poll. Thursday's report marks the fourth month in a row during which the jobless rate has grown due to an influx of immigrants seeking jobs in the U.S., driving up the labor supply while hiring remains somewhat stunted. Thursday's news comes a day after the federal government said inflation rose 2.9% last month versus a year ago. The first time price increases have fallen below 3% in over 3 years. Now, a lot of economists suspect the Fed may turn its attention to the labor market as its new indicator for rate cuts. The payroll numbers are really where the action is going to be over the next couple of months. That's where the Fed is going to be focused by far the most of its attention. Thursday's numbers follow a particularly weak July report earlier this month, including an unemployment rate of 4.3%, representing a 3-year high that caused investors to panic. The latter, combined with the Fed's announcement a few days prior that it would be maintaining interest rates, stoked fears of a crash, shaking the market and causing a steep sell-off. That obviously didn't last long. The Fed's 525 basis points worth of hikes through 2022 and 2023, a response to steep pandemic-induced inflation, have caused companies to cut back on hiring efforts. Layoffs generally remain relatively low, though big names in the tech and media industries such as Google, Amazon, Tesla, Paramount, Sports Illustrated, and Los Angeles Times have cut jobs throughout the year. The Fed has maintained its interest rate in the 5.25 to 5.50 range for a year now. Fed Chair Jerome Powell reaffirming in July that the Fed's goal of reaching a 2% inflation rate before issuing cuts. The number of Americans continuing to receive benefits after an initial week of aid fell 7,000 in the week ending August 3rd to a seasonally adjusted 1.864 million. The amount of workers receiving benefits for extended period of time nears levels seen in 2021, remaining high as Americans experience more difficulty finding jobs due to an excess of labor supply. Now, again, what will that mean for mortgage interest rates? I would probably say the Fed is going to cut rates in September. Mortgage rates have already started to retreat. They're hovering around 6.5% for a fixed rate 30-year with someone with good credit and above. Do I think it's going to drop lower than 6.5? Well, and if any of you get my e-newsletter, I spoke that I do not think that rates will go below 6% before the end of the year. I think a lot of mortgage people and mortgage companies are pricing in a rate cut. So you might see that 6.5 maybe go to 6.25. I just don't expect a significant drop to below. What that will do is open up more opportunities for buyers. With more inventory being on the market, will give buyers more opportunity more variety to choose from. And you're probably talking about properties on the market now at maybe 18 to 22% of listings on the market are experiencing rate cuts. Not rate cuts, but price reductions by sellers as they want to move their product. And I always caution sellers, the time when I put my house in the market, I got multiple offers, that time has diminished. It does not mean it's a good time to, it's not a good time to sell. It means evaluate your situation. See what is in your best interest right now. And judge it if you're willing to maybe take a hit on your selling side with what you may up to or down to. In other words, you may want to get a larger house or you may want to downsize. You will make it up on the buyer end. So be aware of that. I truly think, as always, every situation is different. So feel free to give us a call at 303-359-8218. Again, every situation is different. Thank you for listening to the Real Estate Voice Podcast. Call us with any questions. And of course, you can email me at vernon@joneshomesonline.com. As always, please be safe.